If you ever watch the market move slowly for a while and then suddenly explode in one clear direction, almost like someone hit a power switch, that moment is called displacement. And in smart money concepts, displacement is one of the clearest signs of institutional activity. It shows you where the big players stepped in and where the true intention of the market is revealed. To understand displacement, imagine pushing a heavy shopping cart. At first, it barely moves. You push a little harder and it still feels heavy. But then suddenly, the cart starts rolling with momentum. The moment where the force overcomes resistance is displacement. In the market, displacement happens when one side buyers or sellers overpowers the other so decisively that price moves in fast, clean, directional burst. This kind of move is not caused by retail traders. It's caused by large institutions opening, closing, or flipping positions. When they push enough volume into the market, price accelerates sharply, breaking through multiple levels without hesitation. Technically, displacement is a strong impulsive move that breaks structure with force. The candles involved are clear, large, and one-sided. There is no confusion, no hesitation. It's clean, aggressive takeover of price. And importantly, displacement often leaves behind imbalances, gaps between candles that tell you price moved faster than liquidity could keep up. Most traders think every breakout candle is displacement, but not every breakout is created equal. Displacement must show contest, meaning that before the move, buyers and sellers were fighting for control. Once institutions step in, that struggle ends abruptly. Price then breaks structure in a way that's impossible to miss. Imagine price is chopping around in a range, slowing building pressure. Traders are uncertain. Then suddenly, boom, a massive bullish candle wipes out multiple highs in a single move. That's displacement. Is the market saying this is the direction now? The same is true for bearish displacement. Price might be rising slowly, printing small candles, and then one large bearish candle crushes multiple lows. That's the signature of institutional selling. Here's why displacement matters. It's one of the most reliable confirmations that a change of character or breakthrough structure is real. Without displacement, a break can be fake out. With displacement, the market is telling you that the one side has taken control. Think of it as the difference between someone gently nodding a door open and someone kicking it down. Displacement is the kick. Another key part of displacement is that it all signals the creation of a new directional leg. You will see displacement at the start of trends, right after reversals, and after key liquidity grabs. Because once institutions have collected the liquidity they wanted, they use displacement to drive price towards their targets. This is why displacement is so valuable for entries. When you see strong displacement, you are not guessing the market's direction. You are reading institutional action in real time. Displacement shows where smart money is committed. Let's walk through a simple example to illustrate this. Imagine price is in a downtrend. Suddenly, it sweeps that lows and then prints a huge bullish candle that breaks an internal high. That candle is displacement. It tells you buyers have stepped in with force. It confirms the change of character and it validates the idea that the next move is upward. From there, you wait for price to retrace into the imbalance or the order block created by the displacement, and that's your entry. You'll notice displacement shows up again and again in smart money setups. After break of structure, displacement. After change of character, displacement. At the start of expansion, displacement. Why? Because large players don't move quietly. their activity leaves a trail, and that trail is displacement. One important thing to understand is that displacement doesn't always appear as one giant candle. Sometimes it's a series of strong consecutive directional candles. What matters is the narrative. Momentum has shifted aggressively, structure is being broken, and liquidity is being left behind. Another key idea is that the displacement often creates a continuing block, breaker block or order block, where institutions likely want price to return to mitigate their early trades. This is why traders don't chase displacement. They wait for the retrace back to those institutional zones. Let's use a real-world analogy to make it even simpler. Imagine you're trying to move a heavy couch across the room. At first, you push little by little, adjusting, trying to find leverage. Then suddenly, you find the perfect angle and the couch slides across the floor without an effort. That moment of sudden movement where resistance breaks is displacement. The market works the same way. Lots of small candles represent the trying. The displacement candle is the slide. What makes displacement particularly powerful is that it reveals the story behind the candles. It shows intention, not just direction. A slow drift upward could be indecision. A sudden force will move up tells you buyers are in control, and they are serious. Displacement also helps traders avoid false signals. A weak break of structure might be a trap, but when you see displacement breaking structure is almost always legitimate. The market is letting you know the smart money is stepping in. This concept becomes even stronger when you combine displacement with liquidity. For example, if price sweeps liquidity above equal highs and then shows displacement downward, that's one of the strongest reversal signs you can get, because the liquidity sweep shows the trap and the displacement shows the real direction. To summarize, displacement is an impulsive, aggressive move driven by institutional orders. It breaks structure with force. It leaves imbalances behind. It confirms the change of character and the break of structure, and it reveals intention. And it sets the stage for the next move in the market. So the next time you see the market suddenly accelerate with strength, don't just watch in surprise. Recognize it. It's displacement. It's the market expressing intention. And when you understand it, you stop guessing and start reading price action the way institutions do.